Good afternoon. Yeah, I know, after lunch session, right? It's really, we need to be really energetic to go through this, you know? Sometimes it's painful too. But yeah, the topic itself or statement itself would be nice to look into because while I was sitting in the morning, almost all of the speakers had mentioned about something on blockchain. But I'm not going to speak on blockchain and bore you much, but I'm going to talk about something which is like, on cryptocurrency. So there's a statement, banks can no longer ignore cryptocurrency. So I'm going to take this statement and take this 20 minutes, which is not enough to go through the subject yet, but I'll try to do the justice in conjunction with the time to see, is it really banks can no longer ignore cryptocurrency, or is it a hype? Can I have? It's okay. Thank you. So before we move forward, let's understand what we are talking about cryptocurrency. Okay. What is happening as a cryptocurrency? Cryptocurrency is, or token, they say, or Bitcoin, which is like, I would say mother of cryptocurrency or king of cryptocurrency at the moment, has put us into a situation or put us into this current state where we are aware of blockchain. This is the reality. The blockchain reality has come from the cryptocurrency's adoption itself. So what is the state of the cryptocurrency currently? I'm going to give you certain numbers here and understand what is actually happening on the cryptocurrency side of it. So before we move forward, I assume that everyone is present here has a certain understanding about the blockchain, which is a decentralized network effect with an encrypted sort of a trust building platform or a business model at the moment. This itself is going to be building up or starting to initiate the trust or manufacture the trust among the trade, what we used to do. I mean, world is like around 700 billion or 700 trillions of transaction we do in a yearly, and based on various factors. The moment we put it into digital, there are other challenges which to come in terms of intermediaries, in terms of somebody who comes and have to approve, and we need to trust on the other thing. Blockchain at the core would be sitting and helping us to manufacture this trust. Just to give you an idea on the cryptocurrency, which is a use case on blockchain, which is, again, I would repeat it, it's a use case on the blockchain. Like on the internet, we had email as a use case. Cryptocurrency is just a use case on a blockchain. Internet is not only email, internet has got so many other applications and so many things which have reached us to this digital world, and we talk about in the morning about the digital banking, the customer experience, then the transformation itself. And the core here is, I think, that internet which has enabled us. Similarly, in the blockchain, the core would be the decentralized and encrypted and the trust network, but on top, there are use cases sitting on it. One of the advanced use cases which has started seeing lights is cryptocurrency. So there are basically two types of cryptocurrencies. One cryptocurrency which comes and makes or represents the payments or transactions basis, which could have potentially to replicate or transform or disrupt the fiat system, what we have. Second is a cryptocurrency based on value or gas or transactions or a business model which goes around that. Could be back to an asset, could not be back to not be could be like an utility token, so this sort of thing. So right now, I think 80% of the cryptocurrencies which are Okay, we have almost 1,600 plus cryptocurrencies, our tokens are active and trading in various platforms, various exchanges. Like, there are 200 of exchanges, crypto exchanges around the world, and these are trading. Out of that, 80 to 90% of them are utility tokens. 3 to 4% of those cryptocurrencies are actually like, at the infrastructure level, and some of them are payments and which facilitate those payments. If you name a few, Ethereum, Neo, EOS, Bitcoin, and so many so forth. So what is the basic blockchain aspects of it? It's secure to the cryptography. Cryptography is today's world. I think this is the highest level of encryption we can think about. And Additive Technologies has added up various consensus, various modules to make it like the most secure way. Once it is verified as a ledger, once it is verified, it cannot be deleted or cannot be modified at all. All the participants in the network is available to that. Cryptocurrency is available to all of them in some sort of in a manner. It's verified through a consensus mechanism. We have like proof of work, proof of share, proof of concept, proof of trust, and there are so many proof of you will hear is coming up right now. And it has no central authority. It is totally decentralized. It's based on a network effect. It's supposed to be right there. But there are certain currencies or tokens we see has defying those rules, and we need to see those in a later stage. Let's understand the size, depth, and momentum at the moment, what cryptocurrencies is giving us. We started, in 2014, there are around 29 of cryptocurrencies which were there, around 30 cryptocurrencies, and today's we are talking about 1,600 of them. And maximum of them has come up in the last year, and 2017, around 1,200, we reached to 1,200 number. So in this slide, you're going to understand how the trajectory has moved and how exponentially has moved from USD 6 billion to close to we closed I think 2017 around 600 billion, and it had touched to 700 billion on a market cap when the Bitcoin was around 20,000 par. There are around 3 millions of wallets, which was initially in 2014, it has moved to 21 of millions of wallets which are there. And there will be probably another 100 million of wallets which are inactive in some form of a app or some form of lying in our smartphones right now. So analysts say that it is going to touch around 700 billion by 2017, which has touched. It has reached down because of the volatility of the market, and now we are around 420. Today's date, I think market cap is totally $420 billion. So it quickly has moved up. But what does it make us? This is, analysts also say that 4 trillion it will touch upon a 4 trillion by 2020 as a cryptocurrency thing. So we are around 400 or half a trillion, and then we reach to the 4 trillion in 2 years time. It could capture, it could become gold, how the gold has been as an asset, which is gold is around 10 trillion at the moment, and then it could reach to that ballpark figure very soon. Market grew up around 40 times since 2013, and if you see, okay, you cannot see the down part, probably. Bitcoin has rose around 2,000 times percent, 2,000%, in a year's time, sort of a thing. And then other currencies has some of them has increased around 20,000%, 5,000%, 6,000%. That sort of a figures we are talking about. So, as I mentioned, 1,600 currencies live and trading today. Bitcoin market share is humongously increasing. Okay, it was 91%. Now it's around 40%. So there are others which has come in and taken place. Okay, there are around 200 crypto exchanges, although exchanges and are mostly not regulated. Their jurisdiction has not come back. It started to coming out and looking into regulating crypto in the world. But we already have 200 of them, or 250 of them, which is like on the waiting list, trading. And these numbers are around 50 billion per day, kind of a volume which exchanges drive to. And one more important factor which is relevant to today's session is there are ATMs started moving up. There are by 2017, end of 2017, there was like around 1,600 of ATMs around the world which been already functioning. And they say by 2 years, there will be 20,000 of those ATMs should be there. These ATMs are actually taking the fiat and giving you cryptocurrency. It's a normal ATM, like similar one. So this is where the cryptocurrency state, that scares us. That's just like, wow. So much of things happening there, and then where are we? Is it going to take away our business? Am I ignoring that part of what is humongously coming up at our doorstep? Merchants save around 2 to 12% of using cryptocurrency instead of credit cards. This is one of the very relevant part in a payment side of it. We have seen that in the US and first world countries, their average cost of credit card transactions is 3%, and developing world it goes around to 7%. And there are many payment systems already in part of the crypto, they started offering the Bitcoin or other crypto transactions. 120,000 merchants are currently accepting Bitcoin or other cryptocurrency in forms of transactions, and 400,000 will be announced to soon coming back. Companies like Microsoft, Amazon, Apple, many of the Virgin Airlines and big companies started accepting Bitcoin or cryptocurrencies at the moment as a form of a transaction. 65 payment companies from 27 countries are operating at the moment. And if you see this other figure, 44% of other, which is there, this is actually if you see US, UK, South Korea, China, Australia, Mexico, Argentina are only 4% of total global population we have. Still there are 44%, which is other, which is 96% of the population which is sitting on those countries at the moment. So, is cryptocurrency already there to replace fiat? Let's understand, okay? It's simply better in most ways, some macroeconomic perspective. We have total money in various forms is around 85 trillion. Those forms are in terms of physical money, in terms of stocks, in terms of bonds, and others, and digital money. Out of that, we are talking about around 2.1 trillion as a physical money, it's 9 trillion as a physical money, 70 trillion around on the stock and shares, and 200 trillion in terms 200 million in terms of a bond. 200 billion, I'm sorry. So, if you just have to see those, today's the 86 trillion spread across at 180 fiat currencies, and these are larger economy like US, China, Europe, India, majority is in those larger economy. But then we have another economies who are not into larger economy, who are questionable economy, like Venezuela, Sudan, Nigeria. My friend is from Nigeria. They are sitting and then many other countries, Bolivia, Bangladesh, Nepal. These are the countries which are there are almost 30 economies there, where the inflation rate is very high. It goes up to around 20%. Corrupt leadership or corrupt political system they have. And then due to the corrupt political system or economic system they have, the money doesn't stay there. So the rich takes the money and convert to the other currency. So those economies are never able to thrive back. And importantly, why those people still remain in the country? Because they don't have any other choice to move forward. Banks is one of the things. Banks doesn't want poor customer, right? They don't want to create poor customer. We are talking about digital transformation. We are talking about experience. All of this is underlying is cost. And then many CFO probably who are sitting here would agree with me that that's where we don't want to. We don't want to keep poor customer, and that is why they're always looking for segments, higher segment, VIP segments, priority segments, that is where the service levels goes up, because those are the customer who can give it. In fact, US also, nobody cares about the poor customer. They don't want to get it away. But at the same time, crypto wallet in my smartphone can act as a bank, okay, where I could use it as deposit, my account, my payments, everything could be there, and this is like mobile bank in my pocket in digitally. 3 billion of us, and I saw a figure in the earlier presentation, like that 3 billion of 4 billion are unbanked, in a global population, and the 3 billion are adult, which is unbanked at the moment, or probably underbanked, right? This is a news for them. This is like the ability to have a banking services or financial services to access in a phone and personalized with the advent of broadband, with the advent of mobile penetration. This is a big news. I think that's an opportunity where the banks should be looking at as a financial inclusion. And of course, the others, the consumers, like for me, which are like advanced bank services, is an opportunity for me to move forward. So what does it tell us? Does crypto, what is happening, like, the bubble which is trying to move forward, and then we're seeing the trajectory growth coming up on the crypto, is actually hampering in the banking business or our business? Our business is right now, or what we care is our customer. How do I increase our opportunities? How do I increase and get more wallet share from the consumer what you have, or a customer what we have, in terms of corporate banking, in terms of retail banking, in terms of all sort of banking, like organization banking, or financial services what a bank could provide. From the blockchain perspective or the technology perspective, there are a lot of challenges. Let's understand these challenges first before we move to the statement and understand, is it going to be disrupting our life or our business altogether. Scaling transactions volume is the top-notch problem. We talk about Bitcoin or Ethereum platforms or fabrics can provide around 6 to 7 transactions per second, whereas Visa and MasterCards are like 28,000 to 30,000, and it depends on the various metrics, actually. That's the transaction. But then we are talking about transaction is the payment, and club it together with the settlement. So that's a very interesting perspective here is, if you use payment and settlement, if Visa can or Master can transact around 30,000 of TPS, transaction per second, but the settlement still takes 4 days, or up to 4 days to take care. But as a consumer level, we've taken care, the payment moves forward, but the settlement happens is up to 4 days. Transaction costs are very high because of the volatility of the cryptocurrency, especially Bitcoin is making it very high. Crypto mining is an environmental disaster. We all hearing about, on various media and various form. Many of the cryptocurrencies are not very decentralized. They are differing from the blockchain perspective of the part. Massive AML and counter terrorist and taxation, evasion issues. And regulators and central banks are just started to understanding this point and moving forward. So these are the current crypto challenges what we have understood. So staying true to blockchain fundamental is extremely important, but it's often forgotten. I have seen, many of the currencies, many of the tokens are based on utility based, and they are not decentralized. They are using a decentralized platform, and most of the value proposition are not decentralized. The scalability is not centralized. Regulation is under question at the moment. So cryptocurrencies are available to anyone on the internet, clear, transferable type of title ownership could be there, and exchangeable for monetary value. These are the characteristics of a cryptocurrency. People come and compare it with money. The characteristics of money that, it should be disposable, it has to be value of storage, it could be like, exchange, a mode of exchange. But down underline, if you look into the cryptocurrencies and tokens, apart from those that it is a value of, it is a mode of exchange, but this has got the three other characteristics of it. Available on the internet, everybody could take it, clear, transferable like ownership, and exchangeable info of a monetary value. Anyone from anywhere can issue a digital assets, share in assets, like, there are lots of digitization of assets is going on. So this is one of the securitization is working on. And trade and assets and instant settlement could happen on the cryptocurrency. These are the characteristics of cryptocurrency. So opportunity is immense, so are the risks. What are the risks we're talking about? The risk is technology, development of the risk. The value proposition is a risk. Blockchain decentralization, part of it is a risk. Regulatory is a risk. We have today, we've been hearing this very often that, there will be theft. It's not happening on a blockchain platform, but then theft is happening around, like, wallets, in the exchanges, and then there are a lot of, billions has been, like, under question at the moment. So if it's really early, and there is two potential, like, where we could see this space is moving forward. Distributed software and decentralized applications, one, and secondly, a currency system, or probably a token system, or a cryptocurrency, what do you call? If I just to give you an analogy of that, Bitcoin, when it came out, like, in 2009, was not termed as a cryptocurrency, but it was a digital payment system. If you read to the Satoshi Nakamoto's white paper and refer to that, there was no mention of cryptocurrency as such there. It was a digital payment system, okay? Taking care of taking in the decentralized, like, the nature of tech, the cryptography of the tech, and enabling the trust mechanism within that whole platform, taking out the intermediaries. What needs to be worked? Standards, scalability, interoperability, new platforms, native assets, token types, economic model. Standards, for example, okay? They would, in the banking systems, or interoperability, scalability, these three things club together. In the banking system is all we talk about, like, various systems. And we understand our system, we have probably 20 different platform or systems within our banking. We have trade, we have core banking, we have CRMs, probably 6 or 7 CRMs within the bank. The retail banking, like trade finance and backend, there are various other systems within a bank. Then we have a system currently which we have to do intra-bank. We have to talk with the other banks and other financial institutes like SWIFT or other intermediaries like who processors. Then we have to go and integrate with the regulatory perspective. So banking itself is a very complex organization, okay, and operation-wise. What we have been able to achieve is about, like, integration with those systems is standards, operability, and scalability of the system. We have been able to today. We have been, like, digital bank or digital, like, completely digitized the banking system. In blockchain, if you imagine there will be one blockchain, it's not going to be coming as a one blockchain. There will be various blockchains, various fabrics targeting to use cases will coming up. So standards is very, very important, okay? In terms of technology evolution also, we have seen that TCP/IP, HTTPS, all other protocols has made the internet coming up in today's world, right? These protocols are very, very important. Their standards are not been yet worked out. Everybody is talking about their own use cases, own fabric, and this needs to be worked out. So the standard interoperability will be the key in context of financial operations. So commercial banks are, of course, facing some risks right now. Banks are feeling that they're gonna be pushed to a currency issuance or verification protocols, right? Central banks are on many central banks in the world are talking about, or countries are talking about sovereign currencies, cryptocurrencies, which will be like countries' currency, and the banks will be the one who will be issued. So it's not type of pushing it. That's one of the risk factor. Risk of losing deposit taking role, risk of fractional credit creation policies, abilities on that part, risk of severe client loss due to the customer experience and not able to redefine the fee-based business around the customers. Right? We talk about there is in a SWIFT transaction, if we do a intra-country, this is cost is average around 7% in trade finance side of it. If we do an outside country the cross-country one, this goes to up to 11% of that. So these are like fee-based system, which is very, very high on this point. And when cryptocurrency would come, this will substantially lower it, not zero it, but substantially lower it. So banks is to be aware of it. Banks are getting aware of it. Financial institutions are getting aware of it, and this is posing as a risk factor currently at the commercial banking system. They are preparing. The commercial banks are preparing in various factor. Okay, instant settlement. Payment and instant settlement is the low-hanging fruit at the moment. We have seen a lot of POCs, use cases, and today morning somebody also mentioned the platforms has been developed, which is purely for the payment and settlement side of it, and that we cannot negate it. This is the first thing we could adopt. We could develop the KYC as a service, which could go within the bank, because as all the systems we are talking about, we could extend it to the competitor or the whole the fraternity or to the ecosystem. Develop as a custody service, which is very, very important for banks to look into the crypto custody service or assets custody services, which some of the financial institute currently holds it as a leader. Develop credit assessments and a service to diversify balance sheet lending, and develop a brokering and merchant payment solution to keep users within your network, right? So in my predictions for 2018, I see 3 predictions coming up right now, and being in the blockchain space and for last 4 years now. I see that regulators will find a global consensus on regulating the currencies and securities. They're going to term it and define it, whether the cryptocurrencies are really currencies or these are the assets, right? G20 is also coming up and working on and formulating a global consensus based on how do you term these cryptocurrencies at the moment. And my feeling is it's going to be coming as an asset or a security. At least 10 global company will issue regulated cryptocurrency, and as I speak, I know Amazon, Apple, Facebook, all are looking at having their own currencies to be introduced into their network and slowly covering to the other ecosystem. At least one company from the currency controlled country would come up with a cryptocurrency. For example, Venezuela is government backed, Petro. If you have heard about Petro, it's just they have started their own government backed cryptocurrency. Then China, which is really now regulating all the ICOs, all the exchanges, and it has been a hub for Bitcoin mining, has looked into regulations in a different perspective, but then there is talks which is happening is that they're going to have soon issue their own currency at the moment. South Korea already has issued their own currency. Switzerland also has issued their own currency, etc., etc., etc. So 2018 predictions would be there are three takeaways for us: regulator, okay, The global consensus will build up around cryptocurrencies, so we could relate it to the outburst of what's been happening from 4 billion to a market cap of 700 billion in 4 years' time, and how does it imply? So my take here is that cryptocurrencies are not yet, although it's evolving, they are not there to impact our business. Yes, from the banking perspective, we need to we would be looking at payment and settlement as a low-hanging fruit and the first adoption of the blockchain, and slowly move into the cryptocurrency side of it. As I said, blockchain presents the opportunity for banks in three areas, and this has been also talked about in the morning. Shortening of the clearing and settlement items, facilitating the payments, and generating new revenue streams. New revenue streams will be coming from the financial inclusion, which I touched upon earlier, is the avenue of opening up the 3 billion of unbanked or underbanked population in the globally is a humongous opportunity for bank to realize that. Bank payment, trade finance, money transfer, post-trade services are the easiest use cases where we're going to be coming up in the blockchain world. Banks' role, whether cryptocurrency takes off or not, and then I doubt it will be taking off of the way it is, because 90% of cryptocurrency which we see at the moment they don't have a very straightforward value proposition at the moment, and they will go away. There will be only 4 or 5 of it remain, which will be which will driving the whole, what we have seen, that whole blockchain and the new evolution to the revolution. Some market participants are challenging the benefit of blockchains, right, at the moment. They are arguing that, this technology has been there since 1991 and still taken so long for adoption. And we have seen only last 4 to 5 years, this has been hyped or talked or came to a level of POC. So we are getting interested into looking into this new way of transfer of value. Growth in peer-to-peer services, smaller and more innovative market participants would challenge bank existing product line, and which is, I cannot say it less, this is the fintech world which is coming up. This is where you need to look at that Amazon's, Apple, Samsung of this, Google of this part, which gonna take your wallet share, mostly immediately in the next 2 to 3 years time, not the cryptocurrency, which I see. Cryptocurrency is actually giving you a avenue of opportunity in the payment side, settlement side, open up a new business way. So I wanted to end with a quote from Bill Gates. He said that, we always overestimate the change that will occur in the next 2 years, but we underestimate the change that will occur in next 10 years. Don't let yourself to be lulled into action. Thinking about this will come, and the cryptocurrency will be one which will evading our opportunity at the moment. Whereas you have opportunity in moving ahead with blockchain further, and also digitizing or digital transformations of current operations. Thank you so much for having me on.